This is the Legacy Wealth Code podcast, helping you build long-term wealth and a lasting legacy through real estate investing, tax strategies, and motivational stories from some of the most successful and influential people out there. Here are your hosts, real estate investor and entrepreneur, Michael Notbaum, and real estate investor and attorney, Andrew Hook.
Welcome back to the next episode of the Legacy Wealth Code podcast. My name is Michael Notbaum, and I am here today with a good friend of mine, Ryan McGuinness. Welcome to the show.
Appreciate it. Thanks for having me on.
We've got some technical issues, so Andrew is taking the day off. Got to try to dial this whole technology thing in a little bit better, but it is what it is. I want to chat with you today. I know you were on here, I guess, about 6 months ago or so?
Probably.
Talking
yeah.
about your awesome life that you've built through the hard money lending business. And, you and I have had a lot of conversations around, what it is that you're doing, kind of your track record and history that brought you to building the business that you have now. And I think it's really cool because there's so many opportunities out there where people try to say it's a truly passive opportunity until you get into it and you're fixing toilets at 3 a.m. and, garbage disposal. So you've actually got what I would consider a truly passive opportunity. Do you agree?
Yeah. I mean, it's we're a lot more active as the portfolio managers, but for our lending partners, it's 100% passive. I mean, we underwrite everything, we handle everything. It can be as passive as they want it to be.
So walk me through, I guess, just for people that don't know your background, your real, from college till now, kind of your real estate, what's brought you to where you're at now?
Yeah, I saw value in real estate around 2009, right? So sort of after the crash. Prior to that, I was kind of in equities and options and bonds, more stock market related ventures. And we saw real estate as a way to make income. And through a friend, I started flipping a lot of houses. Back then houses we were buying stuff for 50, 60, 70 grand, putting 5, 10 grand into it,
yeah.
And making a nice spread. Now those houses are all 300,000, right? I wish I kept them all, but we did that and new construction as well. And that kind of carried me into 2015, 2016, where I was looking to stay in real estate, but I was looking for a product that eliminated a lot of the risk of it, because at that time the market had been going up for maybe 5 years. Now, we've had...
Yeah, you look at the normal cycle and you're kind of traditionally at the top of it.
Sure. So we wanted to see what could still achieve a high yield, but not have that dollar for dollar risk and return like flipping and construction. And we kind of transitioned that point into doing a lot more private lending in real estate.
Yeah. I kind of laughed because I remember when I did the beachfront, waterfront property, and, you as a friend, you're like, yeah, man, that's great. And then I know that you and your brother were like, these guys are idiots for doing because it's, that was our first big, multi-million-dollar flip,
sure.
Which, I mean, most, there's definitely an element of risk in flipping.
Yeah.
And then now you add on $1 million that you're, taking out hard money loans on. And it's like,
yeah,
all right, this is like...
It happens to everybody. Every aspect is going to be over budget. Every aspect is going to be over time. People think with flipping, hey, I'm buying a property, 30-day rehab, 30 days on the market,
right.
And 30 days close, right?
Yeah. That
30-day rehab could be 6 months, could be a year, who knows? Could sit on the market a couple months. And then you may have a time or two of under contract that fall through before you actually find your end buyer. So it can definitely rapidly increase in time and money.
Yeah. So, all right. So you've got the portfolio. You decided to kind of start liquidating some of that. And then are you using your own funds to start the hard money business? Are you using mezzanine debt? What's that look like?
Yeah. So initially our own capital and then some private, friends and family, much of the model that we have now. We don't really deal with institutional lenders because then you're under the scrutiny and the same rules that they have, right? So we are the end decision makers on all of our notes in our portfolio. That allows us to give a quick answer to the underwriting of that deal for our borrowers.
And so, and I can definitely attest to that because, doing hard money loans on a project, they always make it seem like it's super easy. And then you end up basically going through the same underwriting process as if it's like a conventional loan. Like, I need to see the, 4 months of bank statements. I need to see your tax returns. Like, I thought this was, non-QM. Now,
Sure.
All of a sudden, I'm basically giving you my entire life story.
Yeah, and they don't tell you that day one, right? They tell you that.
They
day
tell you that in their
little
flyer,
bit.
like you don't even have to, don't even submit an application. We'll just send you the money. You're like, wow,
Yeah.
This seems easy.
Sure, and I would say with us in particular, it is almost that easy. A lot of other hard money lenders or private lenders, like you say, they approve the deal and then they start asking questions later. With our deals, we try to within an hour or two fully underwrite and approve the deal. You're never going to have any surprises or changes after that. Maybe it takes us a day to underwrite it if it's something complex, but we can get those answers to our borrowers very quickly.
Well, what's funny, like in our friend group, of course, we've got a lot of friends that are in real estate, and we all kind of joke because it's like everyone, they'll call you, you give them the breakdown. All right, let me see if I can find a cheaper version of this. They might find something that on paper looks better and more attractive, and then the day before closing, then they call you back and they're like, hey man, this didn't work out. How often does that happen?
All the time. All the time. Yeah. So a lot of times we're very clear with our pricing structure and upfront. So even though, we might seem a little more costly or we may be more costly up front, you're never going to get those hidden fees that you don't see until the closing table, right? All of a sudden somebody shows up, you see an admin fee, an underwriting fee, an application fee, a wire fee, all these other fees, 5 or 6 fees that add up that we're simply not going to have any of that with us. We have our origination fee and that's it.
You may need to start building in a I told you so fee though.
That's it. Yeah, for sure.
I told you so. It's going to be an extra 3% now.
Yeah. So a lot of times we'll get that. And then a few days before closing, like you say, either they're undercapitalized and couldn't close the deal, their current lender, or it was a conventional deal that fell through, or they're just tired of the waiting process and they're under a deadline to close, or they're going to lose their hard deposit, and then we'll get the deal done.
Yeah. All right. So walk me through like a typical deal. What does that look like?
Yeah. So we're asset only lending. So we're not pulling your credit, we're not pulling your tax returns, we're not pulling your bank statements, no income verification. So you can eliminate that piece, which is the majority typically with bank underwriting, right? That's they look a little bit out of the property, but they're pulling all this other information that takes time, and there's all those variables. So we eliminate that 100%. There's none of that. We're asset only lending. We need to determine the value of the property either through an appraisal or our own knowledge or comps that we can do, and we lend up to that 70% of current as-is value. 70% would be like a clean single-family home. If we're dealing with multifamily or commercial, we may be closer to like a 65%. And then raw land, we're typically up to 50% LTV, loan to value.
And do you even, like, so on raw land, do you care what their goal is? Like, I want to buy this piece of land. Do you want to know what are you going to do with it?
Not really. I mean, it's we'll listen, but all we're looking at is as is value today, right? So if they have some grand idea, that's great, and we hope they exit that way. But we're not lending on that. We're lending on what is it worth today, because if we get it back into default, we're selling it today. We don't hold anything, right? So we don't want to be in the business of being a landlord. We would sell that property. So we just need to know how can we safely exit it.
And so now you were, I know we've talked about scale before, and when you were doing flipping, to flip the amount of properties that you now have loans out on would be a huge undertaking.
Sure. Right now we have about 250 active loans today. So, I mean, even if I had 20 or 30 flips, but I can't imagine 200 something, we'd have to have dozen employees, probably at least a 10,000 square foot office space. You're talking about millions of dollars of payroll, millions of dollars of overhead, and all the unknowns that go with that, right? There's so many variables.
Dealing with the city, dealing with people not showing up for work,
right?
Material
Insurance
costs.
is through the roof, taxes is through the roof. All the problems that ownership comes with it would carry over into that flipping. Where with lending, it's totally scalable, virtually no employees. We have a book of about 90 million now in total loans. And it's very easy to manage.
Well, I know I gave you that book, The Banker's Code, and I told you that you'd been holding out on me because I'm reading this like, okay, so this was like the Rothschilds, their family secret that was passed down generation to generation. And I think that there's so much to learn from that, because realistically, in any environment, the banks are always the ones that win, right?
Sure.
You sell a house, if you're upside down, the bank gets paid first, and then, they're probably going to come after you for the rest. If you don't have the equity, but you're never going to get your money first. The bank always gets their money
Correct.
first.
I mean, there's larger upside potentially to flipping, but as long as you're comfortable with the yield that your notes are returning you, then who cares? You hope your borrowers kill it. You hope they kill it and come back and come back and come back, and So that's the only thing, is that with a bank, you're generally limited to your loan, your loan around or possibly default interest rate, or possibly if you got the property back, you'd have an upside there. But I don't think the risk versus reward or the headache of doing it makes it worth it.
Yeah. So you transition into this hard money thing and went through friends and family, your own cash. You get to a certain threshold where you're like, okay, the demand is still, it's more than the capital that we have, right? So then you started essentially it's kind of like a fund, but I don't think you call it that, right?
Yeah, it's not a fund per se because each individual lending partner knows exactly the specific deal that they're in. So
Okay.
when we get a deal and we underwrite everything in-house, we fully approve it. At that point, we'll kind of custom tailor that deal to already know who's in queue for that size deal or that duration deal. Some lending partners may prefer a longer term, which in our case would be 2-year balloon. Some, a guy might say, hey, I'm going to flip this. It's going to be 90 days or 60 days. And some of our lending partners prefer a shorter term. So we kind of fit that mold to what our lending partners want and then give them the full underwriting on that. And they have the final approval, of course. But if I'm sending you a deal, I'm in it myself and you should approve it as well.
Okay, so you got a deal, one comes across the desk today for $500,000. You're going to lend 70% on that or up to 70%. You package it up, this is approved, you send it out to the people that they're not giving you their money until the deal is done, and they're not even giving it to you directly, right?
Correct. They just fund the title company or the closing attorney directly. We don't ever manage their principal. The only thing we would manage would be the monthly payments every month.
And then how does that work for if somebody invests money with you?
Yeah, so all of our notes are 12% annual. We take a servicing fee from that, and we net the lending partner around 10% roughly, and that's a baseline. There in Florida, the default interest rate goes to 18 or 25% depending on the size of the note. If it's under $500,000, it's 18%. If it's over $500,000, it's 25%. So they would participate in that upside should the property go into default.
How often does that happen?
To go all the way through with a foreclosure is extremely rare. We've done more than 900 deals, and we've taken back maybe 5 properties because our borrowers have so much equity and skin in the game. Even if something unfortunate happens to them, we kind of work with them like, hey, sell this property. Don't allow us to take the property back, right? You have $1 million home. We lent you $600,000 on it, $700,000, whatever. Don't allow us.
Sell it.
Yeah, sell it for $850 if you had to, or $900 in a fire sale. Get rid of it. And we work with our borrowers. We're not like, hey, you're 5 days late. Now there's this fee, and now we're filing this, and now we're doing that. If you're communicative with us and you're saying, hey, I got behind, but in 30 days I'm selling this property, I don't want to get caught up, or in 60 days I'm doing this, we always try to work with you. And that's how we've kind of built our business, right? We see a lot of other lenders that are just all about fees and just driving every cent on their borrowers.
Yeah.
And we see it in every aspect, and we're total opposite of that.
Well, it's kind of crazy being able to maintain that level of service when you get to 90 million on the street is a lot.
Yeah.
That's significant. I think, what was the award you got this year?
Fastest 50 companies in Tampa.
Which is awesome, right?
Yeah,
so
Bay
congrats
Business
on
Journal.
that.
Yeah, I appreciate it.
But yeah, I mean, once you grow, it's like anything business-wise, once you get to certain levels of scale, there's always a new set of problems.
Sure.
So like, what do you think what were you at last year?
Probably 60 million.
Okay.
Around there.
So, I mean, that's a significant growth.
Sure.
What do you think the new problem is now?
Yeah, I mean, the hardest part of the equation is always the borrowers for us. We've been very fortunate that our lending partners are very well capitalized, and over the decade of doing deals with them, when they compare their returns to other investments, and especially the risk of other investments, they have a lot of money on the sidelines that are ready to go. And we've definitely picked up some significant, 10 million plus net worth investing lending partners within the last year or two that really help out. So
that's awesome.
The borrower is always the hard part of the equation, right? It's because that's the finite thing. You got to have a guy that has a lot of money down or a lot of equity, and also decided not to go to the bank route, the traditional bank route, for whatever reason.
So is the majority of the people coming to you fix and flip type guys, or are they? They're
really just one-off scenarios where time is of the essence. They need to get a deal done in 5, 10, 15 days. Or maybe they had 90 days, but the bank's been jerking them around for 85 days of it, right? And they're going to lose the deal, or something is going to happen to where they need to get
their
the deal.
Escrow's gone.
Yeah, they decided to put $50,000 hard down because another hard money lender said they'll definitely get the deal approved, and they call us with a few days. So it's really just somebody that doesn't want any questioning of all the underwriting that's typical and needs to close quick. And really, the premium and interest isn't anywhere near what it used to be, right? All of our notes have always been 12%, even going back 2, 3, 4, or 5 years ago. So the spread back then, when you could get a mortgage at 2.75% or 12%, it's like, man, 9%.
Yeah, that's a big difference.
Now we're seeing 7, 8, 9. Some SBA's 11. There's a lot of hybrid loans, non-QM stuff in double digits. So it's to pay the little bit of spread. It's another reason that our business has really increased.
Yeah, I mean, it makes you call you, okay, I got the equity or I got the down payment. That's pretty much, that's the last question that you really need
That's
to know.
it.
Right?
What's the property worth?
Yeah.
How, and then you need the money to put down to purchase it.
Now, as interest rates have gone up, why have you not increased yours?
That's a good question. Like I said earlier about we're happy with our yield. We're happy with the income that we're making. Our lending partners are happy with that.
Yeah.
We're not trying to squeeze every last dollar from our borrowers. We could have raised it, but then, then's the question, rates go down. Am I lowering? I like that all of our network knows our rates, knows our term. So when you have realtors that are helping assist their clients, they know what they can call us and get, or mortgage brokers or attorneys or title companies. They've done, dozens or tens of deals with us, and they know our terms, so they're not having to, well, let me see what Ryan's rates are today, and let me see what you have to put down today. Let me see what they can do today. We are the simplest, easy one-pager, and we're truly sticking to those facts, as to what we can get done.
Yeah, and I know I've sent you deals. We did an interesting deal not too long ago where I think it changed about 100 times.
Probably, yeah.
Between now and when it closed,
there was so many different properties in and out. I
remember you called me and you're like, well, 10 minutes ago it was off, and now we just closed it.
Yeah, and that was at like 4 in the morning, and like 5 in the morning things were changing. I'm like, what's going on here?
Yeah, usually when you get those calls at 4 in the morning, you can kind of know what the condition of the borrower is in.
Sure.
He's thinking about some different things based on maybe like a roulette session or a craps or a craps session. So if somebody wants to be an investor with you guys, what does that look like?
Yeah, so they would come in. They would just give us a general ballpark that they want to put to work. Now, if they say, hey, I have $1 million I want to put to work, it doesn't mean they're putting $1 million in one deal. So I know, what to limit them up to. So I might call them and say, hey, I have a $200,000 deal in now. They fund it. A couple of days later, hey, I have a $300,000. So we'll kind of go up to their comfort level. Every month, they're going to get the interest payment dispersed to them on the first of every month for all the deals prior of that month. So, most of our lending partners have multiple deals. So their borrower pays on the 20th and the 25th. They'll get a report. It's all automated. And then an ACH batch goes out on the first day of that month and sends them their payment out. To fund those deals, they'll have our full underwriting file and why we want to fund this deal.
Right.
And they give a commitment, and then within usually 5 or 10 days is the actual close date. They wire the money directly to the title company, and that's it. It's really simple. In the event there needs to be, a demand letter for a late payment or even a foreclosure, they're not actively involved with that at all. We handle all that. We have the legal infrastructure to handle all that. Obviously, they have final approval, and we'll keep them, abreast of what's going on. But they're not, okay, my loan's in default. Now I need to find an attorney. There's none of that. It's truly, truly, truly passive for them as much as they want it to be.
So the person wires the money to the title company to get paid monthly. Worst, like longest terms, 2 years.
Correct.
Most of the time, let's just say it sells in 8 months or 9 months.
Yeah. So all of our notes are 2-year balloons. So somebody's not, stuck in some long-term 30-year, 15-year product. The borrower has no prepayment penalty on our notes, so they can pay it off, anytime. I would say around that 8 to 12, 14-month mark is probably the majority of the payoffs, right?
Okay.
It could go up to 2 years, and we've had deals go 2 years, and again, other lenders might say, hey, your balloon, we're not renewing, we're foreclosing on you now. If the property's good and the economy's relatively the same and that borrower's been making payments, we'll renew it another year or 2-year term. There's no, we're not out to get anybody's property, nor do I want anybody's property. I'd rather just collect the interest and have them in it. So we would extend at that point. And there's always liquidity in our notes. We hold all of our notes in-house, right? We don't sell our notes off. But if somebody has a personal liquidity event they need, I would just assume their note with my own personal capital or another lender would take over. So it's not like, oh man, now I'm not going to see my money for 2 years.
Right, I'm screwed for 2 years.
Yeah.
That's pretty awesome. Okay, so somebody wants to get involved with you. What, do they call you? What's the process look like? Because they're not giving you the money. They're just basically saying, hey, I want to be an investor with you.
Correct. We're servicing and everything. Yeah, they can contact me. My cell phone is 352-262-3722. They can reach out to me directly.
And I can verify that you answer, I think, pretty much all the time, unless you're boxing or it's past 8:30 at night and you're asleep.
Yeah, and in between boxing rounds, I might still pick up.
Yeah,
if you catch me past my bedtime, I'll call you back at 4 a.m. Don't worry.
So what are you looking for? I mean, now that you went from 60 to 90 million, what's the goal for 2024?
Yeah, just continue the growth, that we're on. I mean, I believe for sure we'll be well into the low hundreds of millions. We're just trying to keep getting our name out there and keep growing. but the organic growth of the company, because you're doing all these good deals. And, one thing, when Bank of America says they're going to fund you, and you sold your house in Virginia and you're moving down, and it's Tuesday and you're moving down and you're closing Friday, and you got your wife and your kids and your dog and the U-Haul, and you're all coming down, and Bank of America calls you on Thursday and says, hey, we didn't realize how much money you spent at Best Buy on your credit card last month. We can't fund this deal anymore. It's off, right? And which is real. I mean,
no, I'm laughing because you're not wrong.
Yeah. So we get that call. If Bank of America funded that deal on Friday, they wouldn't have told anybody about it. It's just expected. So we get that call on Thursday on a guy who doesn't know us, guy who's been dealing with whoever for 30 to 60 days, and he calls us and is like, man, we're supposed to move in tomorrow. We got everything packed in. We're on the way down. Is there any way that you can get this deal done? And we get it done in one day. He's telling everybody.
Right.
And the 2 real estate agents that were about to make no commission are telling everybody. And the title company that was about to do all the work for free was telling everybody. And the attorney that did the work, he's telling everybody. So it really sells itself versus just an ordinary lender or other hard money lender that just do what they're supposed to do when we come in and save something that was like a catastrophic event for a family.
Yeah. When you think about, too, I mean, from like an investment standpoint, I've got friends who, and Andrew and I on the last episode talked about what wealth meant and what building wealth meant. And I've got friends who have this mindset that they just, I save my money. And like they literally have hundreds of thousands of dollars in a checking account or a savings account that makes like 0.025% interest.
Yeah.
It's like the end of the year on $300,000, they made like $12.
Yep. Yeah. I mean, and we're in a higher interest rate environment. So even somebody like that, hopefully they're getting 3 or 4 something percent in a CD. But I always tell people you're going to make more than double that with us. And if you truly understand what we're doing, you realize that the risk isn't there, right?
Yeah.
People think, oh, mortgages, I'm lending. What if they don't pay? Well,
that's your most profitable
exactly.
deals, probably, right?
Yeah. My baseline is 12%, but my default interest is going to be 18 or 25%, or potentially a house with a half off coupon, right? I lent $500,000 on $1 million house. Those are the biggest home runs because you're making almost 100% return then.
And again, most of the time, that $500,000 house, like when shit hits the fan, they were halfway through construction and they ran out of money.
Sure.
So now it's worth more anyways because they did a lot of stuff to it.
Almost always our borrowers improve their property on their own money. We don't lend on rehab, right? So those little sticky situations, I think, that's how you find yourself in a bad situation. Yeah. Lending on rehab and people don't perform, and then you're like, all right, well, where's the money we lent him on? We gave him $100,000 for rehab, and the guy didn't do much with it because he paid something else off with it.
Right.
We will never have those issues because we don't underwrite like that, and we don't lend on that kind of stuff.
Is most of your stuff in Florida?
Almost all, yeah. Because again, we have organic network, right? So probably 90% of it is within 2 hours of Tampa. Probably 9% throughout the state. And then 1% outside of
like
Florida.
When I call and say, "Hey, can you lend me money in Indiana?"
Correct. Yeah. Outside the state, we don't have the legal infrastructure. We don't have a ton of construction crews if we need it. I'm not there to manage the project in person, so that would be something that we would lend a lower LTV. If somebody had a single family home, we may only go 60 to 65% on an out of state deal.
So, are you optimistic of the real estate market going into 2024 and beyond? I know we're in an election year, so it's kind of...
Yeah, I think it's healthy to have a tapering or even a down. I think Florida and Tampa in general is maybe insulated from much of a downturn because everyone, continues to want to move here and live here. But I think it's okay to go down a little bit. And these higher interest rates, who knows if they're going to trickle back down or go back up, but it has to slow things down. You can't tell me that, 3% rate environment and an 8% rate environment. I mean, it just kills affordability. It kills payments, lines of credit, car notes, all these things that really add up, and it hurts people in their pocketbook. I don't care, if you're middle class and you're doing well, when your interest expense is 2 to 3x of what it was a few years ago, that's really going to hurt on what you have.
Well, and I think, what's the most surprising to me is the fact that we haven't seen like a huge downturn.
Sure.
It's like, to your point, like back in 2016 when you're like, well, we're kind of at the tip of where a normal market would turn, and it just kept going up. And then 2022, it's like, it's still going up.
Yeah.
And now you start to see a little trickle off, but it's like, I'm not seeing prices go down.
I agree with you. My opinion on that is that people have the properties. First of all, they're not in a big rush to sell because then they have to go buy a higher interest rate note, right?
Yeah.
A lot of those properties for sale are locked in at 2, 3, 4%. So if they did sell, so they're kind of like, okay, this is my price if I get it, but they're not willing to go down. But I think over time, you're going to have more and more people, they get into a situation where they have to sell, and then you're going to have those price cuts, and then you're going to have, appraisals come down and kind of the butterfly effect of that. But I don't think it's a rush like we've seen maybe in 08 or, 09, something like that.
Yeah, that was kind of like the perfect storm of everything that could go wrong.
Sure.
Yeah.
I mean, the people who have the notes, loans generally have good underwriting. It's not the days of 08 where somebody with no job with 780 credit can go buy 5 beachfront condos because they did a stated income loan,
right?
And they have okay credit.
When the mortgage guy calls his buddy, the appraiser.
Yeah.
Hey, I got this 123 Main Street. I really need it to come in at 650, and it's worth 425 on a good day.
Or they're lending 100% LTV or 120% LTV.
Yeah, the 120s was always great.
Yeah,
what could go wrong in this scenario? It's just so great.
The bank's like, hey, let me lend you 20% more than it's possibly worth,
right?
And think this is okay.
Which is really kind of crazy to think about because banks are very conservative typically. So for them to be like, I'm banking that this is going to go up by at least 20%,
sure,
and we're so confident we'll lend it to you now.
Yeah.
And then obviously what could go wrong? We saw what went wrong with pretty much everyone being foreclosed upon. So, well, I mean, dude, I think this is awesome. I think what you've built in a fairly short amount of time. I mean, you saw a good niche. I think, there's other people out there that call themselves hard money lenders or private money, and it ends up being really basically a normal loan in terms of all the underwriting and everything.
Sure.
You've made it a pretty straightforward and simple process. I would say the only, when I talk to people about, what you do and kind of how they can invest some of their money, the negative side, and I think part of it's just not understanding it, is hard money, I think, has this like weird negative connotation.
Absolutely.
Like you're imagining a mob boss like in a basement, like he's giving you the hard money loan if you don't pay by Friday.
Yeah, that's why I like getting out there and talking to real estate firms, and if anybody has real estate firms, I'm happy to come talk to them because even seasoned real estate agents and especially newer real estate agents, they understand, the term hard money, private lending, but they really don't understand what it means or what it is. And even if they do understand it, they don't understand our company, right? They've dealt with another hard money lender and they were like, hey, yeah, they said they'd approved it and day 25 of 30, the hard money lender bailed. Like, you're never going to have that. So I've been trying to get in front of a lot of agents and explaining what we can do and how we can save all their deals, right? Because I mean, as an agent, you've seen how many deals fall apart because of financing. And a lot of times it falls apart late into the contract.
Well, you remember that guy I sent you, Paul. He was with, a hard money guy, and, everything looked great. It was actually a hard money guy I had used, and it was easy when I did it, but that was because I had done so many deals that my experience, but they give, absolutely. And then in the 11th hour, they pulled the rug out from underneath them, and you came to save the day.
I'm getting in front of agents and brokers and explaining that and explaining there's a lot of other advantages, like when you're a buyer and you're negotiating with a seller and they want $500,000 for their house and you say, hey, I want to give you $450, and they're like, no, I want $500. But when you approach them and say, hey, I'm using a private lender, there's a little bit more of a spread of interest, we can close next week, there's not going to be any underwriting, we're not closing in 30 to 60 days, how about $450 because I'm absorbing these other costs that I'm going to have to incur, and there's the guarantee we're closing next week.
Right.
As a seller, that's much more reasonable than a guy just saying, hey, I want $50,000 off because of it. So, explaining that to the agents to kind of coach their clients and use that in the, the development of the deal, it really has helped out.
Yeah, no. And I think that there's definitely a huge education piece there for agents, because if you don't do anything on the investment side, you don't really understand it. Sure. And I think getting people informed on that is key. So investors, though, that want to partner with you, how often are you explaining that this is a pretty safe way to do it?
I get a lot of calls. I get calls most days. I'm not the pushy salesman, probably because we're well capitalized from other people. So it's not like, oh man, we committed to this deal and I need to find this money. Let me just call the last 8 people I talked to and beg them for cash, right? I'm always happy to get anybody in. I love getting people in. I love people making money and entrusting me with their money. So it just depends on the deal flow of who we need to get in.
Yeah, so we'll drop a link in the bottom, I guess just your website and obviously your cell phone number for anyone who wants to explore the opportunity. I know we've got a couple friends in our immediate group that started with a couple $100,000 on a deal, and they're like, man, this is awesome.
Yeah.
And now they can't wait to fund the next deal because part of it's just the fact that once you see the money in your bank account, it's like, okay, this is truly passive. I didn't have to do anything.
Yeah.
And every month I'm getting a deposit, which is great.
Yeah. Anybody that's gotten in has always significantly increased their money with us. And they just keep piling it in. They're getting their monthly disbursements of interest. And I didn't mention this earlier. When their deal closes out, they get all their principal back too from the title company. Again, we don't handle that. So then they have the option to, hey, I want to reinvest that, or I want to add more, or whatever they want to do with it.
How quickly, like say something closes today, how quickly can somebody get in another deal?
We close deals most days. So,
oh, really? That's
I
awesome.
obviously have other lenders to deal with too. But if you made a commitment with capital, I would hope that within 1 to 2 weeks we can get you worked in and always get you in that flow.
That's great.
Yeah.
All right, so we'll drop that in the bottom. I appreciate you being on again. It's it's always great chatting with you, and I love the fact that you've built such a crazy big business, and I've been here to kind of watch the whole thing grow.
Yeah,
so.
I appreciate it. Have me on anytime. Thanks.
Absolutely. All right, till next time, guys. Legacy Wealth Code Podcast. Onward.
Thank you for joining us for another episode of the Legacy Wealth Code Podcast. If you enjoyed this episode, click subscribe now and never miss an episode. Until next time, onward.